Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Tuesday morning market webcast. Okay, so you see we had the big push down. There was a little bit of bearish follow through yesterday. All this stemmed from the bulls' inability to follow through on Friday after the big day on Thursday. So we've tested daily mid-band, printed as low as 89.5. They bounced it out of that though, and we ended up closing. We closed in at around 2806, 2807 area. There's been follow through to the upside overnight, and unless the bears can convert 0506, the bulls have converted the daily mid-band to support. And now we do that slow walk up to the 2826 area, which we talked about yesterday, which is your weekly pivot, your pre-FOMC price, and your 9-day. Which is the blue line here. How 26 reacts is going to be very important to the rest of the week. Weekly pivot being the best indicator of tape control, along with a couple of other key areas there that on the daily chart, the 9-day is always big. And in the ultimate sense, whether that pre-FOMC price becomes longer term resistance or longer term support is very meaningful as we head into the rest of March and into April. Yesterday in the 2805 area, you ended up with short, intermediate, and long-term inflection points all jammed up together in the space of a couple few handles. You had the opening RTH print, hourly mid-band, our proprietary moving average, the 5-minute mid-band, and the daily mid-band. So like I said, short-term, intermediate-term, long-term, all hanging around, call it from 2802 to 2805. The open yesterday was nasty. I mean, they ramped it up to 13, and they dropped it right out of bed and went down and did as low as 2790. Which was the area of our proprietary lower level. Then they ripped it right back to the upside. So I ended up right off the open. I got banged up. I took a couple of -5s off the open. At one point I was -13. We ended up +8.5 on the day. At one point we were up +12 or +13. So that's not the way I like to spend a day. I don't like going down and then doing 25 handles to the up. I don't like to get streaky like that. But once that open kind of sorted itself out, it became a lot clearer as the day wore on that there was going to be some decent stuff to the upside. Right now we're flat. I'm taking a hard look at that 26 area there. Chances are we're not going to do anything before the open. Then I'll get the room going. But it looks like a slow march up to that weekly pivot, right? And what happens there is going to be important. So, at that point, I can tell you all the same things I told you yesterday morning in the webcast about the importance of the weekly pivot, the importance of testing it early in the week, and how whoever owns the weekly pivot, by the time you get to Wednesday in the afternoon, tends to have directional days Thursday, Friday. So that's what's on tap today. Who's going to control the weekly pivot? The bears flip the field. They should have the advantage, and they still do, until that 26 area gets converted. So if Monday, Tuesday is about a slow walk to the weekly pivot that holds as resistance, and then you go ahead and break that low from yesterday, that low can run a bit. And the one fly in that entire ointment is the fact that yesterday they established a daily mid-band of support. And if they lose the 9-day, which also happens to be the area of the weekly pivot, then all this entire move looks like is just one big test of the daily mid-band that holds. And we've seen that countless times over the last 6, 7, 8, 9 years, and typically it's resulted in new highs, which means over the course of this week and next week, 2866 is history. So 26 is a big deal. All right, everybody have a good one. Join us at 9:20 on Instagram. Take care. Trade them well. Follow us over on Twitter, Instagram, and Snapchat at Princeton Trader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well.